Can you see members coming in?
I cannot. Where would I see them? I don't have I don't have attendees open. Is there any reason to have the attendees open?
Is your Q&A open?
Oh, yeah.
Names are showing up as 2 a.m.
Well, good evening to our Elevations community. We're so pleased to have you this evening. We'll be starting the presentation in just a couple minutes, letting everybody to get logged in. Thank you. Once again, thank you for joining us this evening. We're just waiting for a few more attendees to log in, and we'll get underway here in just a few minutes. Thank you for being here. Well, good evening and welcome to our second edition of the Marshall Fire Rebuilding Town Hall. We're so happy to have you with us this evening. This evening's panel will be fielding questions around your mortgage questions, as well as questions on the rebuilding process. And there are a lot of questions. So it's great to have you here this evening. My name is Dennis Paul. I'm our Vice President of Government Affairs and Strategic Partnerships. I also am the chair of Elevations Foundation, and on behalf of the board of our foundation, as well as the board of Elevations Credit Union and our entire staff, our heartfelt welcome and our sympathies for the stunning losses we've seen in the community. We have a large group of attendees this evening, so we anticipate quite a few questions to get through. This evening, you'll be using the chat, the Q&A feature. So as your questions surface, please enter them into the Q&A and we'll make sure to get them to our panelists. Our panelists tonight are our Senior Vice President of Mortgages, Elizabeth Million, as well as our Senior Vice President of Commercial Lending, Todd Peyok. Elizabeth is well seasoned in all aspects of the mortgage transaction. And of course, Todd will be able to walk us through our questions on the rebuilding process. So with that said, welcome. And let's get right to our Q&A. I see the questions are already coming through. Elizabeth and Todd, are you ready?
Absolutely.
Perfect. Well, thank you two so much for being here, and your expertise will help guide our conversation this evening. So a number of questions have come in already around buying a new home. Can I qualify to buy a new home if I still have a mortgage on my old home?
Yeah, that is a great question. You absolutely can buy a new home, even if you continue to have a mortgage on the home that has burned. So that will depend on your debt to income ratio. So depending on what your income is and what your debt is and what the new home debt will be, and you qualify, and you absolutely can. We have a portfolio product that we're using here at Elevations, and making some exceptions when people are close on their debt to income ratio because of the situation they're in with the fire.
Very good. Well, that actually leads into another question, and that is, what do I do with my existing mortgage? So we have an example of a homeowner that's gotten a settlement from insurance, and they are wondering if they should pay off that existing mortgage or use that settlement in the rebuilding process. Todd?
Yeah, that's a great question. It's probably the number one question that I fielded over the last month from people inquiring about it. And it's not a simple answer. It really comes down to mathematics. What we're finding is the majority of the time it makes, because of the hold time and stuff like that, it makes the most sense to pay off your existing mortgage and then move forward fresh and clean with a construction loan. However, with that said, there's a lot of variables in there. We've put together kind of a calculator to estimate it. And what I'd encourage people, if somebody can plop up my email, you know, if you want to send us what your mortgage balance is, your mortgage payment, mortgage rate, how much you're anticipating in insurance proceeds, and then what your estimate is to build, we can run a quick analysis to see which would be the best route to go, whether it makes sense to pay off your mortgage or not at this time.
So I think what I'm hearing you say is we should probably get these folks connected with you directly.
Yeah, if there's a way to share my email here at Elevations, and they can just email that information to me, and we can do a quick analysis and then follow up and let them know kind of what our thoughts are. And the question everybody asks is like, hey, I got a great mortgage rate right now. I'm at 3%, 2.75%. I'd like to keep that. Well, the issue comes in, so using simple math, if, hey, I got a $500,000 mortgage and it's at 2.75%, I'm going to need another $500,000 to $600,000 to rebuild moving forward. Well, on the construction loan, when it's all said and done, the product that we would have to put you in is either a home equity loan or you have to refinance into a new mortgage. And the variable is that on the home equity loan, rates are higher than a conventional mortgage rate. So once you do the blended factor of your existing mortgage at 2.75, maybe a home equity loan rate at 4.5%, you're usually better off to go pay off the mortgage and just get the conventional mortgage when the construction is done, depending on rates, of course.
Right, right. Interesting. Yeah, the idea of adding a home equity loan to the equation does seem to muddy the waters a bit in terms of that annual percentage rate. Elizabeth, did you want to weigh in on that question at all?
Yeah, we get this question as well. And I agree with Todd. He's got a great calculator tool that he can certainly use with the members who are interested in talking to him. And I think typically it makes the most sense to pay off the mortgage because there is that longer holding period. There's kind of an unknown actually as to when people are going to be able to start building. And so, you have to ask yourself, do you really want to be carrying a mortgage payment for 3, 4, maybe even 5 years? Or does it make sense, to Todd's point, to start clean? And get a construction loan and then have that converted into a permanent loan at the end of construction. So it's a case by case, each member, each situation, that and that's why we're here to help. That's what we do. We want to help you. We want to help you understand the options that you have. And yeah, so I do have to agree with Todd. Typically, it makes the most sense to pay off the mortgage.
Yeah, no, that's great. Thank you for that. When our members are hurting, we're hurting. So we want to steer them as best we can to make sure the scenario that they elect to pursue is in their best interest. Question came on the screen. Can I use my housing reimbursement for my insurance company to qualify for a new loan? So I'm assuming that's a question about maybe a down payment or proceeds going toward the permanent financing. What is your sentiment on that?
Yeah, I believe this question is actually around, the fact that homeowners are going to get a reimbursement for their monthly expense that they're having right now if they're having to rent or live somewhere. There's a limit on that the insurance companies will pay out, but I believe that it's the housing reimbursement that's being asked. So if you can, if you are receiving the housing reimbursement, we are able to help. Elevations is able to help. We have a portfolio product that is an ARM only. It's 5-year, 7-year, or 10-year ARM. We do not offer 30-year fixed on this. Unfortunately, a 30-year fix, we could not use the housing reimbursement.
I see.
But for our portfolio ARM, we absolutely can. And this product is called a loan committee. And we're helping people today utilize the loan committee loan in order to buy another home.
Perfect. That's really great to know. And that's one of those nuances that we want to make sure we catch when we're discussing these matters with our members. In general, if we can get an SBA loan, is that better than a construction loan?
It can be. I mean, the SBA is offering some great products, but there's limitations on those products. The thing I caution people is make sure you got enough money to do the entire build. And that may come from collective efforts of part of your insurance proceeds, part of the SBA, and then even a construction loan as well. So it is a good product. It's reasonably priced product. I think the interest rates are very favorable on that, but just make sure you got enough to do the whole project. And that, like I said, it may be various sources to fill that gap.
How would our membership, how would individuals and families find out more about that, Todd?
I think you have to, I forgot the website, it's sba.gov, where they're offering for, I want to say it's up to $200,000 for rebuilding, and the interest rate's fairly low. Would be a good place to start and look.
Okay, very good. That's
And
great.
Todd, aren't there limited funds? You can't
Yeah.
really, you wouldn't be able to get the full cost from SBA, correct? Or their construction.
Yes, I mean, they have it is limited and stuff. So some people, if it's going to bridge the gap necessary between their insurance proceeds and what they need to build the project, great source. If it's just going to fill a portion of it, like, you know, you're going to need $1 million to rebuild, and your insurance is $400,000, and you only get $100,000 from the SBA, and then you need $500,000 from construction loan. Most of the cases, I tell them it's better off just eliminating the SBA and just getting the full amount on a construction loan.
Yeah, so I think what I'm hearing is you want to make sure the big picture is in mind.
Yes.
And ultimately to make sure you don't have a gap in funding. Here's a question that we have this evening. As most of us are aware, most of you on the call are aware, Boulder County extended the debris removal timeline. Will Elevations be able to help in covering this with any loan specifically designed for this assistance? So I wonder if that's all part of the construction loan or.
Yeah, that would roll into the construction loan component. So when you get to that level and you're ready to remove the debris, you know, that would be basically what we call a line item on your construction budget. So that would be part of the construction loan itself.
Perfect. Todd, that's great to know. That's got to be reassuring when we start these processes of turning soil and moving things forward. Does Elevations have any resources that can assist impacted families to pay for rentals while their properties are being rebuilt? That's a great question. Now, that's an interesting question because temporary housing, of course, that wouldn't be folded into a construction loan. I wonder what that would look like. And don't both of you speak at once.
Well, you know, I apologize, Dennis.
I think we've stumped the panel.
You've stumped the panel. Listen, this is a great question, and my heart goes out to you because, oh my gosh, you know, what all of you are going through and being impacted, and, you know, even trying to find housing that's reasonable to rent until maybe you decide to rebuild your home, I know can be a challenge. So I am not aware of anything, Dennis. You know, possibly a personal loan might assist with that. I mean, you might want to talk a little bit about what we did with the foundation funds and where they went.
Pardon me, Elizabeth.
Yeah, no, go ahead.
No, I'm glad you bring that up. Obviously, there are resources in the community, many resources. One of the best places to start is likely the Boulder Office of Emergency Management's website. And I'll bring that up on the screen here toward the end of our time tonight. But Boulder County Housing and Human Services, Boulder County, the Community Foundation serving Boulder County, they're likely going to be able to field that question. And I would hope be able to direct households to resources where there's a situation where interim housing needs to be paid for. So that's a great question. And just to echo your sentiment, Elizabeth, that is a heartbreaker. So I hope we can get our members in the community resources they need. If my insurance claim is handled by DMI, what can I expect the insurance claim process to look like? And DMI, of course, is Dove and Mule Mortgage.
Right, who is our subservicer that we use here at Elevations? Yeah, that's a great question. I'm glad somebody asked that. So, so the process would be as such: if your claim is over $40,000, then you would want to bring in the check to Elevations, a branch, preferably. Please bring in your insurance information, the claim, the adjuster report, everything, and that check then would have to be sent to DMI for their review. That process all in by the time you get it to us at Elevations at a branch, and then we get it delivered to DMI and you get your funds back. Can be a couple of weeks, 2 to 3 weeks. Sometimes we're going to require an inspection depending on what's happened in your home, the type of damage that has happened. We will require an inspection, so that's why I'm saying 2 to 3 weeks. The inspection services have been going very quickly, I can tell you, which is great. They're getting into the homes very quickly. If your claim is under $40,000, then you can bring your check as well to a branch, and a branch manager can sign that check for you. Because as most of you know, when your insurance check is cut to you, it's in your name as the homeowner and then also Elevation's name. And so if the claim, it's not the check amount, but the claim is under 40,000, then we can go ahead and sign that check for you.
Great. And I assume our branches have seen traffic doing
Yes.
that exact thing.
Yes, lots of traffic, and of course our Louisville branch, our Lafayette branch, but all our branches are here to help you. So please, go to your closest Elevations branch and they're there to assist you.
Very good. Very good. Thank you for that, Elizabeth. Here's a general question. I think it's a great question. What have you been hearing from affected people at this time? What are the members saying that are coming to us? And are they encouraged by encouraged, or are they discouraged? Or I know we're doing everything in our power to expedite the processes. Can you give us kind of a sense of what you're hearing, Elizabeth and Todd?
Sure, I guess I'll go first. I'm so surprised by this community, how they have rallied around each other, and they're tenacious. If people want to get through this, it's heartbreaking, it's heart-wrenching. They've lost all their personal effects, their personal items, their memories. I mean, they're gone. But people are determined to get past this. I think they have a resolution to move on. Some have decided that they want to just pay off their mortgage and probably sell their lot and just maybe move out of the area. But there are quite a few people who want to stay. This is a wonderful, wonderful community. And I'm really, really thrilled and surprised how many people want to rebuild and rebuild their community and be around their neighbors again.
Todd, do you have anything to add there?
Yeah, I share Liz's sentiment that I'm amazed at the support that the community has given to these people and stuff. And we've fielded a lot of calls. And I think the thing I'd encourage people the most is just reach out for almost like a consultation. I mean, we're not pushing our product or anything. I do construction loans all the time, every day. So happy to share what we hear, know, and just give you some direction, guidance, insight, stuff like that. And through these conversations, we've learned a lot of different variables are out there. And I think most people, here's a good example. Most people have been focused on, here's what I got from to pay off my mortgage. Well, there's another component that you're getting from your insurance company, which is your contents and personal property. So depending on your situation, that can be utilized as well towards rebuilding, replacing, stuff like that. And, we track all that stuff for insurance purposes. So we do a lot of accounting on construction loans to help out through that process as well. But probably the thing I hear the most is most everybody's never been through an event like this, obviously, but they have never been through a construction. They bought the house they're in today and it was finished. They didn't have to get construction. So me and my team, we're happy just to kind of walk you through the process, talk about it, weigh the options, kind of map it out. And unfortunately, we have been through this a couple of times before with other members who lost their homes in a fire. So it's uncharted territory for most people. Like I said, unfortunately, we've done it before. We've worked with insurance companies. We've worked with mortgage companies. We kind of know a little bit more how to navigate it. And, it's a big puzzle.
Yeah.
Most of the time, we're used to working with a 500-piece puzzle, but in this case, with all the scenarios and those involved, it's about a 5,000-piece puzzle. But that's our job, to put the puzzle together and kind of come up with a plan that everybody's comfortable with.
Well, I love that, and I appreciate both of you sharing those thoughts. And I would just encourage our membership to reach out. Again, that's what we do. We're here for you. Elevations is we're only as strong as our weakest member, so we'll do everything in our power to help you navigate those roads around you.
One of the things, Dennis, for those, there's a maybe familiar. There's a Boulder Valley Build Expo that's coming on Friday, February 25th and the 26th. And this is a gathering of probably 15 builders within the market that are setting up booths and stuff, and we'll be there as well. But it's a great opportunity to kind of get some of your questions answered more directly with builders and costs and estimates, and a great group of builders that are going to be there from very different aspects. You'll have some very high-end builders that can build to your liking, others that have put together some plans on various neighborhood and subdivisions, and they'll have kind of plans that you can pick and choose and say, I want this on my lot, I want that on my lot, stuff like that. So if you have any interest in it, I think it'd be a great event for those that are going through this to possibly attend.
That's great. That's really great. What we'll try to do is through the Eventbrite system. I hope I'm not over promising here. We'll try to get information out on the Boulder Valley Build Expo, as well as get Todd's email out to our attendees, posted up on Eventbrite. If we can do that, we'll sure try. Todd, it occurs to me that you make a really interesting point. A lot of families have never built a home. It's very different to build a home than it is to buy a home. So this is going to open up a whole new realm for many, many of our families. And we sure hope that, it's our sincere hope that you can go through the process and rebuild and reclaim your part of our community. Okay, boy, I'm glad I have two experts on this call. If an impacted member has paid off their mortgage with Elevations, can they get some sort of reverse mortgage for the rebuild? And I think obviously I go right to construction loan, but you might be able to help us understand that.
Sure. There's not really, since there's not a structure there, there's not an option of doing a reverse mortgage. What I also want people to understand is when you're rebuilding from the construction side, we're taking the full package. So I think a lot of people may not appreciate that, hey, I've paid off my mortgage, I have this vacant lot that doesn't have a structure on it. Well, that lot has value that is considered in the equation of loan to cost and loan to value. And, there's been some lots in these burned out areas that have already hit the market that are being listed for sale. So, we're waiting to see what happens on that. But be aware that if you're like, hey, Todd, I paid off my mortgage, I have no mortgage, I own the lot free and clear, but I don't have any cash to put down towards a construction loan. Well, you do. You have equity in your lot. And in most markets, this is,
it's an excellent point.
You could be $250,000, $300,000, $400,000 in value. So don't necessarily get hung up on the fact that you don't think you have the down payment requirement. If you paid off your mortgage, you have more equity than you think already from the get-go moving forward.
This is precisely why this is such an important, these town halls are important, just to uncover things that we might not have considered at all. So here's the question. The $64,000 question. What are the rates, costs, terms that you are seeing for the current construction loans, and how does it transition into the 30-year loan or permanent financing?
Good question. Everybody should be asking that question, right? What's it going to cost me? So,
right.
This is our backyard. This is our community. These are our peeps. We got to help these people. So what we've done is we've kind of, for lack of a better term, discounted our construction loan pricing. And actually, typically our construction loan pricing is 1% over prime rate. Prime rate is 3.25. We've lowered that down to quarter over prime. It's extremely rare that you'll see a situation where construction loan pricing is less than mortgage pricing. Most of your stuff's going to be 3.5%. Now, another factor that people need to take into consideration is our product is designed to where you're only paying interest on the funds as you use it. So if you come in and say, hey, Todd, I need $800,000, you're not paying full amount on $800,000 at the time of origination. Your first draw from your builder is going to be $100,000. That's going to be for, removing the foundation, shoring up everything and stuff. And so you only pay interest on the amount as you draw it. And then progressively, as you draw more and more and more, obviously the payments go up. But it's a way to kind of minimize your outflow during this time period to where you're not having to pay interest unless you're using the funds. At the end of the day, what happens? Everybody's like, okay, I just do construction financing. Liz does mortgage financing. So, we've got a phenomenal team of mortgage lenders here. At the end of the day, construction loans done. You get your new CO, certificate of occupancy. We want you to work with our mortgage team. We transition everything over to them. They actually look at the file at the same time that we're looking at the request to make sure everything fits, that we're doing everything right. So it's an easy transition. And also, here's what we're doing. And in order to help those out, you do your mortgage with us at the end, we're waiving all of our lenders' fees. We're not double dipping or anything like that. So, we want to help. We want to get these communities built as quickly, as painlessly as possible. And I realize this is probably a one-time event for everybody to build a house. I don't get a lot of repeat customers. I'm a nice guy, but I don't get a lot of repeat customers. But we want to make it as painless as possible.
Yeah, that's really phenomenal. And that's great information for our members to have. Liz, do you want to add anything kind of on that transition from construction to permanent financing? Is there anything our folks on the call should know?
I mean, just exactly what Todd said. We try to make it as seamless as possible. And we're, the mortgage team is involved at the beginning of the construction loan. We're made aware of the scenario, what the member is going to be doing, what their needs are. And then after the construction loan is complete, we're happy to refinance them into a permanent 30-year fixed.
Great. Well, hopefully that's obviously going to be a smooth transition.
Yeah, and I think having, sort of giving somebody a financial break, because we know that there would be two loans in that scenario, that to Todd's point, we're waiving all the fees for the new mortgage, which I think is, hopefully beneficial to some.
Oh, of course, that's great. Things like that are hugely helpful in the process. Thank you for that. Here's a question around business impacts. Does Elevations have any more financial resources for businesses impacted by the Marshall Fire on top of business insurance? So I'm not sure how are we supporting our business clients, or what resources do they have available, if any, under our roof?
Naturally, we would look at the situation and see if there's an opportunity or ability to lend them some funds, maybe a line of credit, or help them get through this. I think the SBA is another great resource for this as well. I'd probably steer a lot of people in that direction in order to help them out because, candidly, they're offering some very attractive pricing. I mean, their rates are extremely attractive on that front, but again,
that's a great resource, and
yes,
obviously some of our folks in the audience have explored that, so we would certainly encourage our small businesses to explore that as well. Thank you for that, Todd. Here's a question that's coming up on a regular basis. We're hearing a lot about it in the press, and I'm very anxious to get your take on it, Todd and Elizabeth, and that is, what steps can you recommend if I'm underinsured? Real catchphrase right now.
Yeah, and I want to let everybody know you're not alone. Probably 95% of the individuals out there are underinsured, and it's sad. But it's really it's no fault of anyone. It's only been in the last 2 to 3 years that construction costs have skyrocketed. I mean, at all-time unprecedented highs. So, you know, use me as an example. My team and I sat down. I bought my house 3 years ago. I know what construction costs are. I thought I had adequate insurance. Went through the analysis that I've been going through with some of these people, and I was underinsured by about $350,000. So it happens a lot, and it's not uncommon at all. I don't want people to think, you know, I'm that one person. No, pretty much everybody I talk to is underinsured. So it's a common situation. So what we're doing also is we've expanded our underwriting parameters because a lot of people are underinsured. We're extending like our loan to value. So typically on a construction loan, we would only lend up to 80% of the future home value. That's another thing people need to understand is when we do a construction loan, as part of the process, you give me a set of plans, you give me a cost breakdown, I give it to an appraiser. Appraiser runs out and says, Todd, if this house were built today, it'd be worth X. So it's about the only loan you've got that you can borrow against the future value. So understand that as well. I think a lot of people
Key point.
Don't understand that process. So typically we'll go to 80%. We've decided for the Marshall Fire victims, we're going to press that to 90% loan to value.
Wow.
So that, you know, so at that level, you know, with the lot coming in free and clear, if you pay that off, or even if you don't have the lot fully paid off, you're like, hey, I'm still underinsured. I didn't have enough to pay off my mortgage. I'm short by 100,000. You may still be okay if you get to that 90% loan to value ratio. It's unfortunate, but like I said, most everybody I've talked to is underinsured.
Well, my sense is it's time for all of us to have a heart-to-heart with our insurance agent and talk about remedying that, because to your point, construction costs are that is a vertical curve for sure. So,
and
well,
people need, I'm going to reiterate, you know, there's 2 checks coming from your insurance company. The first check is going to be your depreciated value check. And that's the one that's, you know, lower. And then if you rebuild, there'll be a second check that comes in, and your insurance company should definitely walk you through this process. So there's a lot of people that it behooves to rebuild so they can get that second check, really. So let's say your total insurance is, I like simple numbers, 600,000. You may get 400,000 up front, and then you get the 200,000 of proof of once you've rebuilt it. And there again, that's part of the construction loan process. We get invoices from your builder, proof of payment, and we just hand it over to the insurance company so you can document where all the money went, every dime, and get that second tranche of a check.
great. We always hear that insurance companies are tricky to work with. It's the consumer's responsibility to hold their feet to the fire and make sure that they understand the insurance company's process completely, because that's likely half the battle. Thank you for that, Todd. This is a great question. You mentioned the Boulder Valley Builders Expo. This member is asking if Elevations has any lists of builders, if the members still have not been able to decide on one. So I'm not sure. Do we have a referral list? That's not something we would typically. That's not something we would typically see.
Yeah, we do. Absolutely.
Okay.
Email me. I'll provide you that list. We reached out to all the builders that we work with and just kind of polled them and said, hey, how many of you have the capacity to help out? And overwhelmingly, I mean, some of them are like, hey, Todd, I'm good for 10 homes. I'll help out 10 people. So we've put together a list of builders. I would definitely encourage you to go to the Expo because, like I said, there's 15 to 20 different builders, all from different market segments in regards to, you know, price points, ranges, finishes, stuff like that. So, but again, if I don't know if somebody's able to throw out my email out there on the IT side.
Yeah, we're going to ask our members that are on the call this evening if they could put their email in the chat. That's a private chat. If you want to add your email, we'll make sure you get this information. And again, we'll try to get some, as far as those of you that are SVP, we'll try to get a follow-up from our Eventbrite platform. That's great to hear, Todd, that we've rallied our builders and that and because that's always a great list to have. Here's an interesting question, Liz. You might want to field this. How does Elevations handle the value of a home lost in the fire that was just recently appraised in preparation for a refinance? So I think the question is probably what's the value of that appraisal? How would we use that appraisal?
So if I understand this question, Dennis, the home has been lost in the fire.
But it was
And
recently appraised.
Recently appraised.
For a refinance,
So the refinance would probably not be moving forward because the home is lost. So I
right.
don't know if that's the question. And if, I don't know if this member wants to come off mute or we want to find out who that is and I could get some more details on that. I'd be happy to answer that.
All right, very good. So yeah, I think that, so I don't know how that would, that might play into the equation with the insurance company. That would probably be
Well, yeah, maybe the question is,
what to do with that appraisal, or if
well, could that appraisal be used? Perhaps, I don't know. I don't know. I think we need to have more details before we answer that.
Very good.
I want to make sure it's correct information we're giving them.
Very good, thank you. We are buying a replacement home to live in until our home is rebuilt. Will Elevations waive all the mortgage fees for those affected by the fire who are rebuilding? And of course, Todd, you just shared with us some great information around how we're doing our loan to value, as well as our rate for the construction loan. So I don't know if you want to recap that real quick, but that's really helpful. I think that's where this question was going. Was the answer is yes, and we'll have the ability to streamline some of these fees. Is that what I heard you say, Todd?
Yeah, if we do the construction loan, you move over to the mortgage side has generously agreed to waive all their lenders' fees, and it's straightforward. Like I said, we want to keep it seamless. We share information, so it should be fairly seamless. I mean, the biggest thing is you'll have to come back in and sign another set of mortgage documents, but for the most part, we have a file sharing system, so we can share files and talk through it and walk through it. But the mortgage side has agreed to waive their loan lender fees.
Now that I think that's really great. I appreciate, Elizabeth, your approach to this with our fire victims. A similar question has come in. We're thinking of purchasing a small temporary home while rebuilding our Louisville home. What are the ballpark rates for a 30-year fix if we were to lock today? And if we were rebuilding, would this temporary home be our primary until we moved into the rebuilt home?
Yeah, this is a great question. I'm glad somebody asked it. Absolutely. We would, first off, I just want to answer the last question. We would consider this home your primary. So you would get a primary interest rate, which I think most of you know that if you're buying a primary home versus an investment property home, the primary home has a better rate. And our rates today, we're at 4.125. So, rates have increased recently, and we're continuing to see them go up, but that's what the rate would be today. And we would absolutely love to help you with that if you're thinking about buying that home, and we would put you in a primary home loan for that.
Yeah, interesting. Immediate follow-up question. So these folks don't need a construction loan. We are buying a home to live in now while we wait to rebuild. Will you waive the loan fees for this temporary house we are buying? So I'm assuming that this is considered a purchase of a primary home, as opposed to the benefits of the construction loan, Liz. So
yeah, we don't. I mean, currently, we have a program with somebody who's rebuilding their home. We don't really, we offer very low rates and also fees, and we don't have anything that we're offering right now for somebody who is purchasing a new home.
Understood. if you can scroll up on the Q&A, that would be great. I can't see the next question.
I can read it to you, Dennis.
Well, all right.
Does Elevations help with discounts if the home being rebuilt was not a primary residence?
So that's real similar question.
So I think, Todd, your rate would be discounted, correct?
Yeah, for us, if you're rebuilding your primary residence, a second home, an investment property, our rates are going to be the same on the construction side.
And we would offer also the waiving of lender fees for the new mortgage loan.
Yes.
Very good, thank you. Let's shift gears just for a little bit and talk about homes that were not lost in the fire, but homes that were affected by the fire. My home sustained smoke damage. The insurance doesn't cover the cost to fix the damages. Can I get a home equity line of credit or pull cash out of the home to complete these repairs? That's actually a question we've seen in the past.
Yeah, that is a great question. So depending on the amount of damage that happened in the home, we would Elevations would be able to offer you a HELOC product for sure, if you would like to utilize that to help fix some of the damage. And then Todd, do you want to talk about any construction product around that?
Yeah, there's also, I mean, construction loans aren't limited to just completely rebuild. We do a lot of construction loans for people that are just doing home improvements where a home equity line of credit really won't work. And again, it goes back to that, the construction loan is the product you're borrowing against future value. So if there's a significant amount of damage and it's $100,000, $200,000, $300,000, most likely, depending on the damage, we would put that on more of a construction loan product. You know, we could keep your, because of the small loan amount, we could keep your first mortgage in place. Ideally, we hope that's with us, Elevations, but we could keep their first mortgage in place, do a second, it's a construction loan, but it's in a second lien position. You do the improvements, you finish, then that would roll into a conventional home equity loan home equity line of credit or loan. But
if they don't have sustained damage, they could definitely get the HELOC.
I think the HELOC would be the route to go. Yep.
If it's just if it's smoke damage, per the question, for sure.
No, that's great to hear. It sounds like options, and we want to make sure these homes that were affected but not taken down, these folks have options as well. Along the same line, my home is being repaired but is currently not inhabitable. Can I buy a new primary residence? So I think this probably looks like some of our earlier questions. It sounds like we have some folks in the community that are going to buy a home and likely live there until they rebuild. So
and yes, you can, depending again on your income and your debt. So depending on the cost of the new home, but you absolutely can, if your home is being repaired and not habitable and you want to buy a new primary residence, we will consider that new purchase a primary residence for you.
Oh, great. No, that's great. What would we do without you two? Seriously, I've got to tell you that I'm learning a lot as well. And frankly, I feel like our members have access to some really great information. Along the same lines, my home does not have fire damage, but it has wind damage. What should I do? And I assume that's an insurance claim, but so have we seen situations where there was significant wind damage and we needed to go in and maybe look at a HELOC or something like that?
Well, I think depending on the damage, if it's severe damage and you needed the second construction loan, for example, as Todd is offering, then that might need to be considered. But if there's not significant damage that is impacting the safety, security, or soundness of the home, then perhaps a HELOC could be obtained. So I think you have two options there as well.
Thanks. So I wonder where should this individual start with their insurance company?
Oh, absolutely. Start with your insurance company.
Very
yes.
good. Well, here's a question that I'm surprised took this long to come up. Liz, you and I are speaking about this earlier today. Does Elevation still offer any waiver of mortgage payments? So I assume that's
Yeah.
the line along the theme of forbearance. Can you talk a little bit about that, please?
Yeah, absolutely. We're offering our members who are impacted by the fire a forbearance. So for the first 90 days, it's just you request it. It's somewhat automatic. We do need you to talk to our loss mitigation team or to DMI directly on that, but we absolutely can help you with that and connect you with somebody. And then if you want to have an extended forbearance, there is some qualifying after the 90 days, but absolutely we can put you into a forbearance or
Great.
help you with that.
Great. That offers could offer some critical breathing indeed.
Absolutely.
So we talked a bit about this earlier, but this came up, and I know that it's scenario by scenario. What happens if I don't pay off my mortgage?
You can have your mortgage in place and still look to get a construction loan. So, we have to look at the whole package and stuff like that. It's a little easier for us if you have your current mortgages with Elevations, because what happens is you have another financial institution that's holding the funds. We need to get the funds released, use your insurance. If you don't pay off the mortgage, but you have insurance proceeds, setting in an escrow account with another financial institution, it takes a little more navigation to get everybody on the same page of releasing the funds as you start building. It's doable, absolutely, but it adds just another layer.
Yeah, I was just trying to think of the advantages of keeping the mortgage.
Well, I mean, that's why it's sort of a member by member situation, case by case situation. And Todd is really great at analyzing that. What I would advise our members is that, if you do decide to continue to have your, keep your mortgage in place, you will be required to continue to make your mortgage payments. If you're in a forbearance, that's one thing, but once you come out of that forbearance, you again choose to keep the mortgage in place, you'll have to continue making that mortgage payment even though your home is gone. So that's one thing that people need to realize. I don't know how psychologically that would be for people to continue to make a payment with the house not being there. But and then, of course, your insurance is going to change. Most people escrow their taxes and insurance, so your taxes are going to be changed because it's going to be assessed on the vacant land. The Boulder County assessor was on our last town hall. They had great information on how that's going to work. And you want to talk to your insurance provider and make sure that they adjust your insurance, because you would probably need liability and other types of insurance only, and not, obviously you don't have insurance for a house because it's no longer there. So your mortgage payment might change slightly, obviously, with the taxes and insurance going down.
Yeah, we're going to see some dramatic shifts in assessments temporarily, aren't we? That's certainly something to think about. Next question is a heartwarming question. Does a family impacted by the fire have to already be an Elevations member to work with getting a mortgage with Elevations? And I'd love to take that question.
Absolutely. They do not have to be a member. We will work with them and help them, and they will become a member. So we would love to help them out. Please send them our way. We'll take good care of them, we promise.
And Dennis, that's why I'd offer. You don't have to be a member. If you're on this call and you just need some suggestions, we're happy to help with anyone. We do hundreds and hundreds of construction loans a year. So if you just need that unbiased barometer of, hey, Todd, here's what I'm hearing, here's what I'm seeing from your side, we're happy to share and give some assistance regardless. I mean, it's just what we do.
Yeah, and advice. We'll just advise people who are not members. We'll look at comparisons from other lenders for them. And many times, honestly, we may say, hey, that's a great situation, a great loan for you. You should move forward with that lender. So it's really not about, getting every loan transaction for Elevations. It's really about helping the community and our members and our non-members.
Well, I just appreciate that sentiment so much. Elevations, our roots are in Boulder County. And our membership, our members mean everything to us. So member or non-member, please don't hesitate to leverage the resources you have available with the credit union. We'd love to hear from you. I have put a resource page up. I'll just mention that we have resources on our website, as well as a crisis response team and mortgage servicing extensions there. Colorado Department of Regulatory Affairs, DORA, Division of Insurance, is here to help consumers. If you have questions regarding insurance or a claim or your policy, please don't hesitate to reach out to the insurance commissioner. They're here for you as well. And of course, since day one, our Boulder County Office of Emergency Management has been a clearinghouse for literally everything that we can think of associated with this. So please take time to leverage these resources available to you. It looks like we've got one last question, or we're winding down here. Once Elevations receives the 50% advance on our dwelling coverage, can we use those funds to pay off our current Elevations mortgage?
Yeah, absolutely. As long as those funds are enough to pay off the mortgage, you can utilize, you can ask that the funds pay off the mortgage, and then you'll get the remaining funds sent back to you above and beyond paying off the mortgage. So absolutely.
Very good. Well, I would ask you to, thank you again, Elizabeth, for being on the call this evening, as well as you, Todd. You guys are a plethora of information for our members. Is there anything we haven't covered that you want our attendees to know about?
I just that we're here for them, and we're here for the community, and we're a resource. Use this as a resource. Todd has a fantastic team in the commercial and construction lenders, and I have a great team of mortgage lenders, and we're here to help you. We have a lot of people who can help, so don't hesitate to reach out.
No, that's great. That's great. Todd?
Yeah, absolutely. Please reach out to us. We're happy to help. We're available. We've put together calculators and stuff to assist with this. Probably if anybody asked, the biggest advice I would give to everyone is just make sure you have a plan depending on the direction you want to go. If you want to rebuild, make sure you have all the money accounted for. I hear too many stories and the situations that I told earlier where we helped victims whose homes were burned. They proceeded using the insurance proceeds, got halfway down the road in the middle of a construction project, and were out of money. And in that scenario, it's almost impossible for any type of lender to step into a half-constructed house. And if you're working with a builder that's encouraging to go ahead and move forward, even though you don't have all the finances arranged, I'd proceed cautiously. So the situation I see people getting into is that, they're taking the insurance proceeds, they have this pool of money, they're off to the races. Now, obviously, you can use those funds for, starting the process as far as architectural, engineering, contracting with that, but don't do any sticks or bricks. Don't put in a foundation until you have the full plan.
Love it. Love it. You emphasize that all evening. So it's really an A to Z project
Yes.
Before you even get out of the gate. Boy, so many things to think about. What we're going to have here is a community of expert home builders when the dust clears here. So that's great. It occurs to me that one of our dear friends, Julie Van Domlin, she's the executive director of EFA in Boulder County, one of the oldest nonprofits in Boulder County. She shared with me that this is a marathon and it's not a sprint. So one thing that we likely have are our households that have been affected. You don't have to make a decision overnight. So be thoughtful and seek out resources as well. Once again, I would ask our attendees to put your email in the chat, and we'll try to push out some information to you that I mentioned earlier. And we'll also do that through Eventbrite as well. I see no more questions. I just, again, on behalf of our entire staff at Elevations Foundation, our board of directors, we want to walk with you during this time. So we appreciate you being here this evening. This is a series. We'll be doing town halls monthly for the next few months, and we'll mix up our subject matter experts, and we'd like to hear from you on what you want to hear. But on that note, I think we're going to sign off. Elizabeth and Todd, thank you so much.
Thank
And
you.
Thank you.
for our
Thank you.
membership.